Hello and welcome everybody. This is a special crash edition live stream. I'm just kidding. Look, it's a fast market out there. The sell-off is on. Last 2 days have been pretty rough. So I figured we would jump on here and talk about some things, talk about some big levels, talk about the way to act and not act in an environment like this. So let's dive right in. I'm going to switch to the slides. Spencer. Are you good? Perfect. Look, it's a bear market. The evidence is as clear as day right now. This is the NYSE composite, and what you're seeing here is the average stock is in a, let me throw it up to slideshow mode here. Average stock is in a 28% drawdown, and it's like this across the board, right? There's no denying that we're in a bear market, right? So that's the environment that we're in. S&P 500, average stock down 20%. NASDAQ 100, 25%. Small caps, 32%. It's as bad as it gets. And we've been talking about, right, the key levels that we're using to help us navigate, right? The key levels that we're using as signposts to guide us. Do we want to be buying stocks, selling stocks, pressing shorts, looking to play a rebound rally? Here's the environment we're in. I think the semiconductors index illustrates the broader market's situation as good as anything right now. It's been a tremendous run. It's a great bull market if you've been involved, right? But things started really sputtering out for US growth and the broader market last summer, right? That's shown right here. This is the big August sell-off, and then we've been sideways ever since, really just grinding around, chopping around in the massive distribution formation. What happened this week? We got a huge sell-off, right? And a major break of this just key level. You could call it the neckline of this primary trend top, right? You could call it a polarity zone, right? Where we have the prior cycle highs. This is where prices peaked and rolled over late 21, early 2022 when the bear market began. And now we're back there, back in that box, violating that key level, clearly printing a top and suggesting that now, for the first time in years, the path of least resistance is lower for these critical risk-on stocks. And I think the way semiconductors go is the way the broader market is going to go, right? So we have these big levels to guide us. Up until this damage is repaired, I don't think there's anything to get too bullish about. Again, there's a difference between trading a counter trend wave and believing that a new bull market is upon us. I think the evidence right now overwhelmingly clear that we're in a new bear market. Could stuff get repaired? Could we change our minds in a week or a month out? Sure. But the way things are looking, this is probably going to take some time to repair damage like this. This is not tactical trend damage. This is primary trend damage. This is new downtrend stuff. Worst day since. Oh, here we go. Risk appetite is confirming all of this, right? So things like technology rolling over on a relative basis, while things like low volatility stocks today, staples breaking out relative to the broader market. What does that tell us as market participants? It suggests, right, that there will be more leadership in the future from defensive groups, from risk-off trades, right? It's telling you be in a safety trade, own staples, own healthcare, own utilities, own bonds. Maybe don't own the risk-on stuff. Don't own the tech. Don't own the industrials. Don't own anything growthy. That's been tough. We're going to find pockets of strength and opportunities like right now in this market, though. And here's how I know. When we find ourselves saying over and over and over again, like we have been for a while now, of course, it's gotten worse just in the last 2 days. But for a while now, we've been saying worst day since, biggest downside momentum. The short-term rates of change have been moving higher in an alarming way. Today, we're getting just monster moves. And yesterday, too. Yesterday, we were out here saying, worst day since the pandemic for small caps. We were saying, worst day for transports versus industrials, right? This is, I guess, a risk appetite ratio since the great financial crisis. Worst day for semiconductors since the pandemic lows, almost 5 years ago. Worst day for small cap tech stocks since the pandemic. Worst day for tech relative to utilities since 2018 tariff tantrum. Home builders, worst day since 2022, really the bear market lows. You'd have to go back to here. Low volatility stocks, meanwhile, having their best day in 10 years. It's very risk off stuff. But what happens when rates of change blow out like this? This is a big one too. Worst day since the financial crisis for really my favorite risk appetite ratio, consumer discretionary versus consumer staples. But when during the financial crisis? This was October of 08, not March of 09. We're in that kind of market where, boy, you take some shots on the long side, they're either going to be great or terrible. Okay. I think we can start dipping our toes in and taking some of those shots in a responsible way. And the reason for that is because volatility clusters. So when you get some of your worst days since, you find yourself saying, worst price action since some other crazy bear market. But you also have your best days in those same periods. Look back to 2008 in this chart. Worst day for discretionary versus staples was followed by the best day in almost a decade, right? That's going to happen again here. Look at the pandemic, right? Huge down day for the XLY, XLP ratio. What's it followed by? A huge up day. So some of the best long opportunities are actually born from bear market, really extreme, stretched, oversold conditions. I think we're there. If we go back, we could look at some other examples. You could see how this volatility tends to spike at the same time in both directions. So this is going back to the pandemic lows. You could see it a lot better here. Small cap tech, worst day, followed by best day, right? Which we haven't seen in the 5 years since, a better day since that. I think that's coming. And there are some serious opportunities to trade it on the long side I want to talk about. You can see it here with small caps, right? Worst day, back during the pandemic. But look, you also had some of the best days. Let's try and catch that turn. We made some money on our puts recently. We've sold doubles in pretty much any of the put positions that we put on and breakout multiplier. But now we're done with the puts. It's no time to press shorts in this market, right? If you were short, great. Pat yourself on the back, move on. Now I think it's time to spot some longs. Focus on some relative strength. Myself and the analyst team, we've been digging in. We've been running scan after scan after scan since yesterday, trying to spot momentum and relative strength. And there are some interesting groups that we're seeing it in. I want to talk about them now. Spencer, I'm going to flip now to my live charts. Okay. Wow. You got me? I can't hear you. Fantastic. I could see it. Excuse all my markups. Let's just clean it off. This is the S&P 500, right? Getting absolutely clobbered. These are the last 2 days. So you could see the candles of the last 2 days here. Yesterday, we were down 5%. Today, down as much as 5% intraday. We've pulled, we've peeled back some of those losses. Intraday, we're down about 3.9% right now. And we're all the way down to these August lows. I find this to be an interesting spot. What you don't have in the S&P 500, and this is the one-day rate of change, right? So we can go back and talk about, those periods of volatility where you get big down days, right? So for the S&P 500, say, okay, worst day since COVID. Look at the clusters here, right? We're going to get some best days since COVID coming up. They're going to be coming up next week, the week after, next month. That's the environment we're going to be in. There's going to be a face-ripping counter-trend rally that pulls everybody back in, and then will probably be worth fading, right? Right now, I think it's worth buying this dip. Let's get rid of the one-day rate of change. I want things where momentum, this is the RSI 14 down here in the lower pane, where momentum is not confirming the new lows. What's a great example right now? Man, we've been all over the home builders. I'm obsessed with this chart right now. Let me explain why. Let's mark it up together. This is exactly how I want to see it here. VWAP anchored from the October 2022 bear market lows, really the bear market lows. You had a little failed breakdown here in the summer of 2022, and then you really bottomed later in the year, and it's been all, green shoots since. Testing that for the first time since really the monster corrective wave back in the third quarter and fourth quarter of 2023, right? So we're right back there. This sure looks like a completed top. However, momentum really stands out here for me. RSI was super oversold back in December for the home builders. But lately, despite major weakness in the price trend, Momentum won't get oversold. It's really showing some resilience. I think this is a perfect candidate for a scoop and score. If home builders can get back on track too, that's a major win for the bull camp, right? That's the kind of recovery that gets me thinking, oh, maybe, maybe we do fire back and do some sort of a V bottom here. So I think this is worth taking a shot. Oops, sorry about that. I think this is worth taking a shot here. Coming off the VWAP, I think you get confirmation about 96 3/4, call it 97. Let's flip it back to the candles here. Jerome Powell was just talking. I don't think there's anything he can give the market that they're hoping or wishing to get on a day like today. But regardless, I think he should be off by now. If this big red to green candle sticks, this is what you call bullish engulfing, where we explored breaking down, right? Made new lows of the day, which were really new multi-year lows. You got to go back to late 2023, right, to get back to these levels. And now we're taking out the highs of yesterday, trying to get back to where we were all the way back Wednesday of this week. I think this candle could look a lot better come the close too. This is a group worth taking shots on. I was looking at the ITB May monthly 100 calls. Why not, right? Another area that really stands out today. Retail digging in, trying to flip it higher. I think you have some really spicy charts. You can pick your spots. Limit your risk, be out in a day on a trade like something like this. Here's Wayfair. I think everybody knows the story about Restoration Hardware from the other day. How terrible was that? I mean, how embarrassing. Here's Wayfair. Looks to be breaking down. I tell you, a chart like this thing's either a zero or a hero, right? And I think these are the kinds of spicy setups you want to trade for some sort of, massive counter trend face ripper. If Wayfair can find a way to get back above this shelf of lows, so I think it needs to move another $2-3 higher, which would be a big move from here. Call 28, 29. I think you got to trade it. You got to trade stuff like this, right? So Wayfair on a little scoop move. Speaking of the RSI, here's a divergence again. Look, despite just a major sell-off here, look at the momentum divergence, right? New lows in price not being confirmed by momentum. That really stands out. Back to the housing theme, and Wayfair really fits that theme too. Look at the housing related stuff today. And I've had my eyes on something like Zillow. Look, you couldn't ask for a cleaner level, right? We buy these bases all day, right? And something like Zillow, right? We buy these bases all day long. Let's just draw it. So it's really clear what I'm talking about. This is our pattern, right? This is the textbook primary trend reversal pattern. So that's in. And then it goes right into a top, right? After completing a massive trend reversal, took it years to base, break out, and then the top, right back towards that box. But how about the resilience? When stocks that look like this, patterns that look like this are getting absolutely blasted, breaking back into the box or the old range here, right? Something like Zillow, that would happen at 65, 66. Zillow won't break. All we have is overbought momentum readings. And on the down waves, we can't get oversold. You see this here? Can't get oversold, can't get oversold, can't get oversold. If Zillow holds in here, 66, 67, and starts scooping it higher, considering the price action in the home builders, the way interest rates are absolutely falling apart. And here's the thing about housing. Do home builders have to pay more to build a house? If tariffs are increasing around the world, sure, they're going to pay more for the lumber that they probably get from Canada. They're going to pay more for the copper that they probably get from China. They get a lot of stuff from Mexico too. But guess what's going to make houses a whole lot cheaper? Because they're going to pass on all of those rising tariff costs to the customer, right? The home buyer at the end of the day. But guess what's making buying a house a hell of a lot cheaper than tariffs are making it expensive this week? Falling interest rates. I think that's more important. I think the market's telling you right now, pay attention to the housing stocks. If rates are coming down like this, that's bullish for these guys, not bearish, despite the tariffs. You've got something like Rocket Mortgage. It's been a huge outperformer since last week, or since just for the week here. Since Monday, just absolutely ripping higher. You got something like UWMC, one of the largest residential mortgage providers, just trying to hold the lows here. You got the home builders, like we talked about, something like ITB, sporting this really big bullish engulfing candle. If it closes like that, I just love this theme right now. Big fan of this theme. So Wayfair, scooping above the lows. One last area of relative strength that, I mean, is it strange? Maybe. I think the Bitcoin maxis would tell you it makes a ton of sense. You can't tariff digital assets. I don't know. Maybe there's something here. What I will say is that Bitcoin right now, holding up particularly well. You look at something like the S&P 500. That's a new low for sure, right? Testing the August lows. You look at something like tech stocks, which Bitcoin and crypto tends to move with. Let's just clean this up here. Tech stocks, extreme oversold reading, new lows, taking out the lows from August of last year and April of last year, hitting the lowest level since last January. Absolutely nasty. And you look at something like Bitcoin, you say, well, what's going on here? How come they can't break this thing down? No new lows here for Bitcoin, right? So let's just clean this up. This VWAP from the August lows is everything right now. If this holds, Bitcoin digs in. And look at something like Solana. It's always such good information. Solana can scoop it back above 120. It's happening right now. Look, I've been out of Solana. Got chopped up a tiny bit end of last year, trying to trade it back. I'm happy to buy this thing back here. I can't wait for another bull market from Solana. This is one of my favorite assets ever. Right? If Solana can scoop it back above 120, I just love this relative strength and resilience from crypto, broadly speaking, right now. Let's go. I think you could trade this in a number of different ways. I think you could trade the micro strategy. I think you could trade the Ripple. Look at this top holding in here in the Ripple. Look out for crypto this weekend, right? If stocks close strong today, right, and everything appears to be settling down, pay attention to Bitcoin this weekend. There might be a trade there. And then you got some really spicy stuff in the market. Look, we were in puts in Mara. I'm glad we already sold the double. I don't think we're going to get the follow through here. I think this one could scoop higher. You look at something like Clean Spark, really spicy here, breaking down, trying to thrust back into this. That could be tradable. You look at something like MicroStrategy. I mean, is this not the one? Right? If we're back above, call it 300-ish in MicroStrategy, maybe drop a little VWAP from the pivot highs just from late March. Yeah, 310. Let's go. Confirmation at the VWAP from the all-time highs. That happens at 340. Look, I think MicroStrategy is in trouble over the long term. If Bitcoin breaks here, we'll be looking to short it. But if Bitcoin can dig in and rally here, who knows where MicroStrategy goes? Who knows? It's been a good one. Here's IBIT. So that's kind of the stuff that I'm paying attention to, guys. I think currency market's really interesting too. Real's really moving against me today, right? I think some of these developing country currencies are a place to look right now. I think stuff like the move in the CAD yesterday, which I know is giving back a lot today. Pound giving back a lot today also. Wow, too much probably there. Euro had a huge move yesterday. This is stuff that I'm watching too. International ETFs, right, which is the way that US-based investors really are going to express a thesis on ex-US equities. You got to bet on the foreign currencies too. So we really want to track this currency action closely as well. Dollar seems to be finally getting a handle here, trying to dig in, bounce off the lower bounds, but dollar's moving lower right now. It's a downtrend, and that should be a tailwind for ex-US markets. So that's another place that we'll keep watching. But really, the truth about international is this week they caught lower, right? They finally came out. We've been asking the question, we've been saying, is Europe, developed Europe, is the rest of the world going to follow the US lower here? Or are they just going to keep working? Wouldn't that be strange? Well, finally, you're seeing today in a big way, this is the MSCI EFA index, really the go-to index to see how are stocks around the world outside of America doing. You want to look at something like EFA, down 5%, 6% here today, right? This was just at, breaking out, trying to push it to new all-time highs, definitely new cycle highs just a week or two ago. Something like Germany, same thing. So for international equities right now, I think we got to pull back, give them some time, let them sort this out. The price structures longer term still look fantastic. Look at something like Germany. I still think this base goes, right? But the price action this week is telling us it's going to need more time. This is something, I think we want to be so super long in the future once this base breakout goes, but it's a buy on strength setup now. Got to see it. So let's shift gears a little bit. Ex-US stocks had their moment of outperformance this quarter, right? They absolutely crushed the US. You're probably going to get a little give back in that relative trend right now. I think we want to be looking back to US growth, back to the broader US equity market, looking for pockets of strength and trying to ride some sort of counter trend move higher. I think we're going to get a fierce one. That's really the takeaway today. Watch your levels, watch these key charts, see once the buyers step back in, right? We got a green candle, 2 green candles. Let's start taking some shots. I just wanted to come on and share some levels, some big levels with you guys. some big momentum moves, right? Worst day since means best day since is coming. So make your watch list, right? Make a nice list of names that are setting up nicely for a bullish entry, right? And get ready to pull the trigger. I think that's the right move right now. So we got stuff like Bitcoin, housing, maybe a little bit of retail. There's some interesting stuff out there. All right, everybody. Thank you for joining me. Happy Friday. Have a great weekend.